Good morning, everyone. Looking at the US stock markets, the Dow has again recovered from the double bottom formation on top of the 23,300 points level. Since then, the Dow has faced some of the rejection along the 25,000 psychological level and subsequently pulled back. Yesterday itself, we did see the Dow has formed the hammer candle on top of near the 23,300 points level, implying a potential recovery pattern. So this could be the healthy pullback, and this could be the next wave of recovery. Should the Dow recover back above the 24,000 psychological level, we could be seeing the Dow heading back towards the 24,900 or even towards the 25,000 psychological level, with your support located towards the 23,300 points. The gains on yesterday was mainly lifted by the rally in technology shares on the US stock markets. Similarly, on the S&P 500, it did form the double bottom formation on top of the 2550 level. Since then, the S&P 500 has traded towards the 2700 psychological level and subsequently pulled back. And on yesterday itself, or overnight, we did see the Dow has recovered from the 2600 psychological level. So moving forward, we are expecting some of the further recovery on the S&P 500. Firstly, towards the 2700 psychological level, that will be the immediate resistance for now. Should there be a recovery above that, then this could be the W-shaped formation breakout or double bottom formation breakout towards the next resistance at the 2800 psychological level. In the meantime, should the 2600 level were to be taken out, then we might see further pullback towards the previous low of 2550 level on the S&P 500. Okay, some of this on the crude oil prices. It has earlier staged a good recovery pattern along the EMA 60 or the 62 US dollars barrel level. Since then, crude oil prices has rebounded, and subsequently it did breach above the previous double top on top of the 66 or 67 US dollars barrel level. Following the breakout above that, we did see the crude prices has faced on the resistance along the 70, and subsequently it traded on a sideways manner over the past 3 to 4 weeks trading period. So moving forward, we will continue to monitor for this breakout above the 70 US barrel level. Should the crude oil prices rose and close above the 70, we might see further upside towards the 75 or even towards the 80. In the meantime, the 66 will serve as immediate support level, followed by the 62. Against overnight where the crude oil prices rose about 0.7%, was mainly due to the escalating tension in Iran's nuclear deal with US. Okay, on our local front, the FMKLCI has again recovered above the EMA 60 level. However, after rising for past like 3 days, we did see on the next day itself the FMKLCI has gave up all its previous session, three sessions of gains to close just marginally above the EMA 60 level. And on yesterday itself, we did see the FMKLCI has once again traded just marginally lower yesterday, despite being hovering mostly in a positive territory throughout the entire trading session, and due to the final hour or the 11-hour sell-off in selected index heavyweights. For now, we are expecting further consolidation on the FMKLCI between the 1840 towards the 1880 level. Until we can see a breakout above the 1880, then only we can confirm that the CI could be heading towards the previous peak at 1890 or even towards the 1900. In the meantime, should the 1840 level were to give way, further pullback will be seen towards the 1800 psychological level. Now, given that we are approaching the next upcoming general election on next Wednesday, we're expecting the FMKLCI to trade in a lackluster manner or just trade it in a range bound manner over the next coming days. Just give me a minute for the chart to load. On the FM small cap wise, we did see the FM small cap index has recovered from the 13,700 points towards the EMA 20, which is around the 15,200 points level. Subsequently, we did see the healthy pullback on the FM small cap index, and it traded on a sideways manner over the past 1.5 weeks trading period. So moving forward, we are expecting the lower earners to continue to see the further consolidation phase until we can see a breakout above the 15,800 points. Only we can confirm that the FMS market index is potentially forming the higher low and the higher high formation towards the next target at the 15,900 points level. Some of the stocks that we can watch out for today, firstly, will be Econpal. Econpal has retreated from the recent all-time high of $1.41 level towards the recent low, which is around the 93 cents. After hitting the 93 cents, we did see that Econpal has staged a one-day strong recovery on the 10th of April. It rejected the EMA 120 level, which is around the $1.18 level, and subsequently pulled back. During the pullback phase, we did not see some of the heavy selling pressure. Instead, it pulled back without significant volumes and traded on a sideways manner over the past 1.5 weeks trading period. So for Econpal, what we need to do is we're going to monitor for the breakout above the $1.06. On yesterday, we did see a price breach above the $1.06 on intraday basis, but we did not see price close above beyond that level. So until we can see a breakout and a closing above that, only we can confirm that Econpal could be heading towards the $1.18 or even towards the $1.25 level, with your stop loss point located below the $1 psychological level. Should price breach above the $1.06, we also anticipate for the MACD indicator to give us a buy signal, whereas the RSI could be heading towards the 50 level as well. For Inari, price has been trading on a similar pattern with Econpal. Price has earlier retreated from the recent peak, which is around the $2.55-56 level. Subsequently, pulled back towards the $1.58-59. After hitting the $1.59, we did see price has staged a technical rebound. It rejected the EMA 120 level and subsequently pulled back and traded on a sideways manner over the past 1.5 weeks trading period. Following the strong corporate earnings from Apple, which is one of the Inari's key clients, we did see Inari's has staged on the recovery pattern as price closed above the EMA 20 level, accompanied by some of the rising volumes over the past 3 to 4 trading days. Following the breach above the EMA 20 level, we will be monitoring for the next breakout above the $1.86. Should price breach above the $1.86, we are expecting price to head towards the first target price at 214, subsequently towards the 234. Your stop loss point will be pegged below the $1.67 on Inari. On it, we did see the MACD indicator buy signal yesterday for the closing of the EMA trend low, whereas the RSI is approaching the 50 level. Just give me a minute for the chart to load. Press Berhad has made a strong recovery pattern following the double bottom formation around the $1.20. Yes, earlier hit the $1.20 level in mid of November last year. It subsequently staged a technical rebound. However, the rebound did not last long, and subsequently price has once again revisited the $1.20 level on early April. Following the recovery pattern on top of the $1.20, we did price has recovered for the next 5 the EMA 120 level and subsequently pull back. During the pullback phase, we did not see much of the heavy selling pressure, and recently we did see a potential breakout pullback and continuation pattern along the $1.41 level for Press Berhad after price closed above the EMA 60 level. So this could be the short-term breakout, a pullback, and the potential continuation pattern should Press Berhad firstly to retest the $1.63. That will be the immediate target price for now. Should the 1 ringgit and 63 cents level were to be breached, further upside will be seen towards the next target price at 1 ringgit and 75 cents, with your stop loss point located below the 1 ringgit and 41 cents level for our price per heart. On indicators wise, everything appears to be quite positive following the recent breakout pullback and continuation pattern. The MACD indicator has returned green, whereas the RSI has recovered above the 50 level yesterday. For our 3A resources, although we did see a bullish divergence signal was being formed, price has been trading lower during this period of time. However, the MACD indicator has been trading higher, forming a higher high-low formation. Following this potential bullish divergence signal, we did see, confirm that price has recovered towards the 1 ringgit and 16 cents level. However, we did not see any follow-through buy interest beyond that, and instead, price pullback and traded on a sideways manner. We did see that 3A resources has also formed the symmetrical triangle formation breakout on top of the 1 ringgit and 7 or 1 ringgit 8 cents level. Following the recent breakout above the 1 ringgit 8 cents, with some of the higher volumes being traded, we're expecting price to retest the 1 ringgit and 16 cents, and beyond that, further upside will be seen towards the 1 ringgit and 22 cents level. Your stop loss point will be located towards the 1 ringgit and 3 cents level for 3A resources. On the short to medium term wise, the EMA has been on the uptrend formation. The EMA 9, 20, and 60 has been in line. Last two company for the day, firstly will be Burma's Auto. Burma's Auto has retreated from the intraday high of 2 ringgit and 47 cents level towards the 1 ringgit and 99 cents, or near the 2 ringgit psychological level. Subsequently, price traded on a sideways manner over the past two months trading period. So for Burma's Auto, what we need to see is we're going to monitor for this potential symmetrical triangle formation breakout above the 2 ringgit and 25 cents level. Price has retested the 2 ringgit and 25 cents. It did breach along the 2 ringgit and 25 cents level on several occasions, but there was no follow-through buying interest. However, recently we did see that the uptrend inter-orientation formation was re-established. The MA 9, 20, 61, 20 has been in line. So we'll be monitoring for this potential symmetrical triangle formation breakout for us to target firstly the 2 ringgit and 40 cents towards the 2 ringgit and 47 cents level. Your stop loss point, should there be a breakout above the 2 ringgit and 25 cents, will be located towards the 2 ringgit and 17 cents on Burma's Auto. Following yesterday's recovery and retesting of the 2 ringgit and 25 cents resistance, we are seeing the MACD indicators has already issued a buy signal. The RSI has also recovered above the 50 level yesterday. Last company for the day will be M+. M+ has again recovered from the 26.5 cents level towards the 41.5 cents. After hitting the 41 cents, we did see a healthy pullback on M+. Price pullback after the bonus of 1 for 4 was exercised. It subsequently staged a healthy consolidation on the next 1.5 weeks. And recently, on yesterday, we did see a short-term consolidation record on M+ above the 35.5 cents level. So this could be the short-term breakout, pullback, and the continuation pattern for M+. Firstly, to retest the 41.5 cents, and subsequently towards the 44 cents level. Your stop loss point will be located below the 32.5 cents on M+. Since the M+ have been earlier forming the lower low and lower high formation, recently we did see the potential higher high and a potential higher low formation on M+. So this could be the start or the signal of the recovery pattern on M+. If you have any questions, you can put in the chat box and I'll reply you shortly. If there's no question for today, then we'll end the morning briefing. Thank you.